Stanton, publisher of the Worcester Business Journal. And last Thursday, we held our first version of this session on the CARES Act and the Payroll Protection Program, otherwise known as the PPP. Today is a second webinar where in looking at attendees, we have some repeats who joined us last Thursday, but a lot of new folks as well who have a tremendous thirst for knowledge about the CARES Act and what it means to them. So in this session, we're going to hear from three professionals from the Central Mass region who have been studying and getting up to speed on this bill at rapid speed over the last couple of weeks. And we're going to hear from them about how the loan program works for different size firms, nonprofits, et cetera, what you have to do to prepare to apply for it, what part of the loan is forgivable, what's not, a lot of details involved there, and what other costs can be delayed under the legislation that is going to help you preserve cash. We have a lot of questions that were accumulated from our session last Thursday, and we're going to run through a number of slides that go through those questions as well as some of the questions that were submitted before this session began. And then as you're submitting questions live, as the webinar goes on, we'll also be integrating some of those. So I just want to also say that the slides and presentations that you're going to be seeing today are going to be available on our website or through an email actually sent to you after this program is completed. So you can take notes, but you'll also get a copy of the slides. Our panelists of local experts are in the order that they will be presenting: Amanda Risch, who is a commercial finance attorney at Fletcher, Tilton; Terry Shepard, the managing partner of S&G Business Consultants and Certified Public Accountants; and Tom Wolcott, who is a senior VP and commercial banking officer for Country Bank. And so let's get started. And Amanda is going to be giving us her perspective first. Amanda, you're on.
Good afternoon, everyone, and thank you, Peter, for the introduction. Again, my name is Amanda Risch, and I'm an attorney at Fletcher Tilton in our firm's transactional department. Today, we're going to be talking about the Keeping Workers Paid and Employed Act. For those who tuned into the webinar on Thursday, there have been a few developments, and we'll go through those today. For those that weren't able to tune in on Thursday, I'm going to run through the basics of the Paycheck Protection Program, the Economic Injury Disaster Loan Program, and the Emergency Grant before turning it over to Terry and Tom. And as Peter said, hopefully we'll have more time today for the question and answer portion of this webinar. And again, as Peter said, please keep in mind that this PowerPoint will be available later. So if I go too quickly, you'll have a second look at it. So getting right into it, on March 27th, Congress passed the $2 trillion stimulus bill known as the CARES Act. The goal of the CARES Act was to provide emergency assistance to individuals and businesses that have been impacted by COVID-19. One of the most important pieces of this legislation is the Keeping Workers Paid and Employed Act and the Paycheck Protection Program that was created under this act. This is the program that everybody's been talking about. Some call it Triple P or the Paycheck Protection Program. For short, we'll call it Triple P. And this is one of the most important ways that Congress has sought to inject funds back into our economy. Congress has allocated roughly $350 billion in loans that will be available to small businesses and other eligible recipients. And while this is a structured loan, for many companies, it will operate as more of a grant because there's a forgiveness potential associated with it. The application portal did open on Friday, April 3rd for small businesses and sole proprietors. Independent contractors and self-employed individuals can start applying for this program as early as Friday, April 10th. And Tom can talk more about his experience on Friday as he was on the ground, like I like to say. But my understanding was that it was a very hectic day due to some last-minute changes by the U.S. Treasury on Thursday and several outstanding questions surrounding this program that still linger. Next slide, please. So who are the eligible recipients for the PPP loan? It's any business concern, nonprofit organizations, sole proprietors, independent contractors, self-employed individuals. The list is very broad. You have to establish that you were in business on February 15th, 2020. And generally you can't have more than 500 employees, but there are some circumstances where you could be eligible for a PPP loan if you have more than 500 employees, but this depends on the industry that you're in, and I'll go through those nuances in a second. For counting your employees, you count your part-time and your temporary employees the same way that you count your full-time employees. You do not count your independent contractors, because the theory is that they can apply for a PPP loan on their own. Next slide, please. There are some exemptions to think about when you count your employees. The SBA has certain affiliation rules that requires that businesses that are under common control aggregate their number of employees for determining whether the company satisfies a size standard established for these PPP loans. So one of the exclusions that's pretty well known is in the food and accommodation sectors. So those are businesses that have an industry code beginning with a 72. And for those companies, the 500 employee limit is applied to each physical location. There's also an exemption to the size standards for franchises so that the franchisee and the franchisor are not aggregated. Next slide, please. So in looking at the creditworthiness of the borrower, it's important to remember that the policy objectives for the PPP program and traditional SBA lending are very different. So typically an SBA applicant would have to demonstrate a certain level of creditworthiness, which included demonstrating ability to repay the loan, showing that they didn't have the ability to obtain credit elsewhere, typically required an unlimited personal guarantee and also a certain level of collateral. This is not the case for the PPP program. The SBA standards here are significantly relaxed. So you do need to establish that you were in business on February 15th, 2020, and that you had employees for whom the business paid salaries and payroll taxes. And then other than that, you need to establish a few good faith certifications. So there's 5 or 6 of them that are at play here, but I'm only going to talk about a couple of them. And you can check the PowerPoint for what the rest are later. But the first is that the loan is necessary due to uncertainty caused by COVID-19 to support your ongoing operations, that the funds will be used to retain workers or make mortgage, lease, or utility payments, that you have not and you will not receive another loan under this program for the same purpose. And a new nuance that came into effect on Thursday is that all the employees of the company must be U.S. residents. And like I said, this is a new one. Next slide, please. So how much money can you borrow? The loan that you can borrow is 2.5 times your average payroll costs during the 1-year period before the loan is made, or $10 million, whichever is less. Next slide, please. Some of the key terms of these PPP loans are that the interest rate will be 1%. This is up from Thursday. Thursday when I did this webinar, the interest rate was half of 1%. So there's been a slight increase there. There will also be no prepayment fee for these loans. Also notable is that payment of principal and interest will be deferred for 6 months. Interest will continue to accrue for a company during that time, but there will be no obligation to make a payment. And the maximum term of these loans will be 2 years from the date that the borrower applied for the loan. Next slide, please. So what can these proceeds be used for? Well, the CARES Act includes a very broad list of what the loan proceeds can be used for. And that includes payroll costs, payment of interest on any mortgage obligation, but not payment of principal, rents, utilities, costs related to the continuation of health care. And Terry's going to discuss in further detail how exactly you go about calculating your payroll costs for the purposes of applying for this loan. Next slide, please. Loan forgiveness and repayment. The loan forgiveness aspect is the most attractive piece of this loan to many small businesses. So the first thing to know is that you must apply to your lender for forgiveness. It's not automatic, and your lender is required to make a decision on your forgiveness potential within 60 days of your application. You're eligible for loan forgiveness on the amount spent by the applicant on certain specified expenses that Terry's going to talk about in more detail during the 8-week period after the loan originated. So this 8-week period is really important. The loan forgiveness amount can never be more than the initial amount of your loan, and not more than 25% of the amount forgiven can be for non-payroll costs, and that's your mortgage obligations, your rent, your utilities. Next slide, please. So how does a borrower go about obtaining a PPP loan? We said this on Thursday, and we're going to say it again. Time is of the essence. You want to get into this program as early as you can. The Treasury has said, and I believe they said this on Friday, that they will go back to Congress if money runs out, but that's really a big unknown at this point, which makes it even more incumbent on a business to talk to their bank now. So you want to contact your bank that knows you the best and that would be most interested in helping you out with your situation. When you're approaching your lender, it'd be good to have a couple of documents already ready to go. You want to know your payroll costs, know your employee headcount, and an additional set of documents that we've heard several banks are asking for are the business's organizational documents. So that's your corporate bylaws or your operating agreement or partnership agreement, whatever type of organization you are. Next slide, please. So if you cannot obtain a PPP loan, what other options are available for you? Well, there are several other different SBA loan products that a small business can look to. But just for this webinar, I'm just going to talk about the EIDL loans and the emergency grant. EIDL loans are loans that are made directly by the SBA, and this is different than the PPP program. PPP program, you have to go through your lender to apply for that loan. For EIDL loan, the eligible participants are small businesses, nonprofits, certain agricultural enterprises. It's many of the same types of entities that are eligible for a PPP loan. This type of loan can be for up to $2 million, has an interest rate of 3.75% for small businesses and 2.75% for nonprofits. EIDL loans have longer repayment terms than the PPP loans. They have up to a maximum term of 30 years, but they don't have the same forgiveness potential that you see with the PPP loans, at least not right now. Next slide, please. So the CARES Act also established an emergency grant for borrowers who have applied for the EIDL loan. We did get a lot of questions about whether you could be eligible for the emergency grant and get the PPP loan if you hadn't applied for the EIDL loan, and the answer is no, you have to apply for the EIDL loan to be eligible for this emergency grant. The grant can be up to $10,000, and it can be distributed as quickly as 3 days by the SBA, we're told. One attractive piece of this is that if your application is denied for your EIDL, the CARES Act provides that this emergency grant does not have to be refunded. And like I said, you cannot get these different loans for the same purpose. So you can get a PPP loan and an EIDL loan at the same time, but it can't be for the same purpose. I think that this is a good rundown of these particular SBA programs. And with that, I will turn it over to Terry to talk more about the nuances behind how you calculate.
Thanks, Amanda. So I am going to go through somewhat quickly, and I put a lot of detail on some of these slides, so you can go back and refer to them later on. I think the more interesting and more important part is Tom sitting on the front line and constantly changing rules or regs, and I'm sure they're going to be occurring on a daily basis. So there's still not exact clarity of what's expected. And I think Peter came up with a summary of about 5 pages of questions that I think it's important to get to answer those if they're not already answered in the webinar today. So the loan application update, as I said, I'm just going to leave that for Tom because he's had to deal with the late night changes and et cetera. As Amanda had talked about, of calculating the maximum eligible loan. So you need to look at the prior year leading up to the date of the loan. The SBA regs came out and said, we're looking at the calendar year. And someone had asked that question. And the Act actually talked about 1 year period before the loan, but the regs have now said they're using 2019. So you take a look at that, the total payroll there, and you're adding all the other payroll costs on and multiplying by the 2.5, as Amanda said. I put down the seasonal business time periods, and if you're not in business, because those were questions that did come up on Thursday's webinar. Whoops. Next slide, please. So here's the payroll cost defined that Amanda also had talked about. So from 1 through 4, that's all the salaries. And you add to that the health insurance that was paid, retirement benefits, and then the state and local taxes. Next slide. When you're doing the application and you're working out the amount of the potential loan, the maximum amount of someone's salary, that's not the payroll cost, their total salary cannot exceed $100,000. So when we're doing the application, we're going to max that person out or that woman out at $100,000 for the point of this calculation. Anybody that is not a resident of the United States cannot apply. And that if you're applying for any of the credits under the Families First Response Act for some of the salaries you're paying, that's not applicable either. Next slide, please. The loan forgiveness, this is the crown jewel to me. You know, you're eligible for some loan forgiveness. The whole purpose of this act was to make sure that our employees were either rehired or paid during the shutdowns or the slow time periods, because we have all these stay in place orders and non-essential businesses. And so they want to make sure that you do that. And if you do pay those costs out appropriately, that the loan will be forgiven, paid up to that event. And I'll go through that in the next slide. Forgiveness is the amount of money that was spent in that 8-week time period that Amanda had mentioned. And so you get there's a formula that you're looking at the full-time equivalents from the February 15th, 20 to June 30th, 20, and you're dividing that by the February 15th. It should at the June 30th. That should be 2019. And so if you have more employees during the 2020, then it'll be over 100%, and that's why they have in here the loan forgiveness cannot be increased by the formula. But if you have less, it's going to be a fraction of whatever you have based on the FTEs. And then if you try to retain your employees and you reduced some of their or all of their wages, that if you decreased it in excess of 25%, then Congress wants you to, to hopefully raise those wages back up there to put them back to where they were. And as Amanda had mentioned, they want to make sure that you're using 75% of the loan to pay these salaries and wages. And the best part, obviously, is it's not included in your income. That doesn't happen very, very often. So as you're spending these monies, you should keep track of it to make sure that you are maximizing the amount of your loan forgiveness. Next slide. Some of the other CARE Act provisions They're going to give a subsidy on any of the SBA loans that were enforced before the enactment and then after the enactment up to December 31st, 20. And as Amanda had mentioned, 6 months for those that are being first applied for now. And that's also true for the existing loans. Next slide. So they made a lot of these provisions to make sure that their cash was put into the owners and individuals' hands. And so there's a payroll retention credit that you don't have to make these payroll taxes if you follow through in a couple of these requirements. So if you had a revenues that was significantly dropped off of 50% or more because of the stay in order, and if you're partially suspended due to a government authority, and the credit is taken right against your SE tax. Next slide. So the credit is maximized out. It's 50% of the wages up to $10,000, and that's for the full calendar year. And the date of the credit availability is from 3/12, March 12th, until 12/31, except for those employers who had reduced the salary that was more than 50%. Once their revenues gets back up to 80%, then that stops their eligibility for the credit. Next slide, please. So employees taking the loan are disqualified for taking the credit, and the wages are defined, as you can see, by employers with 100 or fewer than those over also. Next slide. So the deferral period, delay of payment of the taxes, date of enactment to 1/1/21. Here we go, 50% of deferral is payable on 12/31/21, and the other is the following year in 2022. And then if you have any of the loan, the PIP loan, that the loan is forgiven, then you're not eligible for this deferment of the payroll taxes. And this is also applicable to self-employeds, and that's based on their estimated taxes. That's where you can reduce your estimated taxes for your portion of 50% of the portion of your Social Security self-employment tax. Next slide. So loan forgiveness is if the employer rehires any laid off workers, as I mentioned, and they increase the salaries. Next slide. Some modifications to net operating losses. They were drastically cut back with the TCJA Act of the year previous. And they have retroactively suspended those, and so they've now allowed for carrybacks up to 5 years. They were eliminated before; you could already carry it forward, and so we can go back to 18, and then 19's return and 20's return. So if you already filed your 18 return and could have taken a carryback, you should consider amending the return and then carrying it back. And the same with a 19. If you filed it and filed it amended. And if you haven't filed something yet and it's applicable, then you can carry it back to get some cash into the back into the pocket. Next slide. These same limitations were put on individuals, self-employed, and for marrieds, it was a $500,000 limit on the loss you could carry back, and for single, it was $250,000. So those have been suspended also. So again, if these were applicable in the prior time periods or for 19 and 20, then you should be carrying it back to the full extent that you're allowed to. Next slide. The AMT credit is now fully fundable, and they said they provide for some refund procedures. I have not seen any of those out there as of yet. but they might be out there. We'll have to keep on checking because they, as we mentioned earlier, that they keep on coming up with new updates on a daily basis. There used to be a limitation on the amount of interest that businesses could take if they had revenues over 25 million. They've now increased the limitation from 30%, and they're going to allow you in 2020 to elect 2019's taxable income in place of 2020, if that helps you maximize or increase the deduction that you'd be able to take. Next slide, please. And for individuals, this could be dangerous, but individuals can now take up $100,000 in distributions. They have 3 years to repay it, but if it's not repaid, then it is going to be brought into income and spread over a 3-year time period. But you get to take that out without that 10% penalty that you would normally have to do for distributions that are not qualified. And then delay of any loans that you might have had on the, if you had 401k loans that were limited at that point to $50,000. They are now up to $100,000, and those loans that you're taking before or even after up to December 31st, 20, the payments are now deferred for up to 1 year. And then the minimum distributions on IRAs are now waived for 2020. And I believe that's it. Next slide. There you go, Tom.
Okay, well, first off, I want to just acknowledge the incredible amount of work that the team at Country Bank has done over the weekend. We've had folks working from 5 a.m. to 11 p.m. Saturday and Sunday as we try to process the loans that have come in. We are making good headway right now. There's a little bit of a glitch today, or not glitch, there's a little bit of a backup with what's called the E-Tran SBA submittal. We think that's because, unfortunately, starting Friday through the weekend, we submitted quite a few applications before sort of a flood hit. I believe a lot of institutions chose today to start. Just as some background, we are finding roughly 2/3 of the applications are needing to go back for some sort of update or clarification. We are not scrutinizing these to the extent we normally would, but we are making sure that the numbers tick and tie. We are making sure that the calculations have been made, and one of the calculations that seems to be tripping people up is the $100,000 maximum in salary and benefits that could be included per individual for the payroll. So that seems to be tripping people up, and we just need to see that the calculation's been done. There is a spreadsheet out there that is not necessarily endorsed by the, and provided to you as a guide. Again, ultimately, as when you apply, you're attesting to the numbers being correct, but we can help you there with a guide. The other thing that happened over the weekend, as Amanda pointed out, is a new application came out from the SBA. So while we can use the old one, they added a specific line confirming that all employees are U.S. residents. And so we've tried to work around, but if we do ask, or any other institution asks for you to update the application, if you're using an old one, please understand that we're attesting when we submit these to the SBA that every employee getting benefit from this is a U.S. resident, not citizen, but resident. And so we in turn need the customer to make that attestation. Otherwise, I think the program is working. It's really been kind of sobering to see the need as we see these applications come in. There is a lot of need for these programs, and that's, I think, what is keeping us working as hard as we are to try to get through the backlog, because there is a lot of money needed to get people by. With that, I think it might help to look at some of the questions.
So Tom, thank you all for that sort of covering the program. these questions that we're looking at are, there's about 20 pages of them. And the first set is mostly in your lane, Tom, although anybody can pipe up and throw in a quick answer. So we have a number of pages of these, and we should kind of go through them as quickly as we can. And I had promised everyone we'll integrate some of the questions that are coming in while we're going as well with these ones that are already prepared on these slides that are from the last few days. So if we can just go through quickly.
Sure.
Where is that application found online? Is it through your bank? Is it on some website now? How is it submitted?
Yeah, that's fair. So the ultimate source would, you go to the SBA, they have a portal. I'm sorry, they have in their site, they have the application and some information too. You can go to treasury.gov. The same information is there. You can go to the bank, confirming, of course, the bank is participating, but you can go to your bank, and if they're participating, they should have, I would hope, the information either on their website or available to you, depending on the size of the institution. There is a portal that is preferred at our institution, and I think most of my colleagues too, and it makes sense because number one is secure sending in, so this adds a level of security that can add a level of frustration for some borrowers, but understand it's the best way to communicate back and forth. And also, as we move to funding, we'll also need the secure portal to move the documents back and forth. But again, I can't speak for every bank, but that's what we're doing. Some banks have bowed out of the program. Go ahead.
Yeah, I guess that could be a question also for Terry and Amanda, which is, what do you do if your bank is not processing these loans, or if your bank isn't an SBA lender?
Well, you need to go to a lender that's either an SBA lender or has opted in to do it. As Tom has mentioned, and some other banks, that right now they're only taking their customers as a first priority, and then they'll be able to go to non-regular customers. So I don't know if Tom, if you have something better that you can advise them. I know they have to make some phone calls, and maybe they just call a bunch of them, and then the first one that calls them back, they, I guess, apply with them. Does that make sense?
Well, I would say this. We're trying to really stretch as much as we can, but we have to have, because we're attesting to the business viability as of February 15th, we're attesting to this is a real person, and there's a potential for fraud here. So this is why banks are in terms of the time frame too. We need to get these in quickly. So we really need to stick to our customers, and that's why the other institutions are doing the same thing. It's not being selfish. It's frankly being pragmatic. However, there are private companies, and I've heard Kabbage.com, Kabbage, and there's a few banks that have actually referred their customers to, I think it's a fintech firm. So I would say if your bank does not participate, and there are a few that chose not to participate, then I believe that is one of the sites that some banks are referring clients to. And that's pretty much all I have on that.
I think that's written down in one of the questions. Can we go to the next slide, please?
Yeah, I can address the first one. It can be one bank only, because you can't get funded by multiple banks. That would be a problem. That would be double dipping, wouldn't it? So you've got to apply with one bank.
So second question, Bank of America, one of the biggest banks, is processing loans, but this person is a very small player. They should stick with that relationship?
I think I speak for B of A, but I think so. I know B of A received, I think, 850,000 plus applications on Friday, I heard from the press. And yeah, I think that's, again, the reason being, if you've got a relationship with an institution, they've already confirmed who you are and your identity, and that is a fairly significant component to this. Again, there's the element of fraud, and we just need to make sure that we know who we're dealing with.
Mm-hmm. Okay. And then the last one sort of had to do with the speed at which banks are getting prepared for this. And I think it's been, drinking out of a fire hose for everyone.
Right, right. I don't envy anyone today. They probably don't know what hit them. We sort of, on Friday, we got deluged and worked through the weekend. And it was tough to work through the weekend, but now we're feeling pretty good. But I do believe most banks are starting to. I think there's a few others that are still waiting for more clarification, and or some of the banks that don't have access to the SBA are trying to get access, and there's an application process. But I understand that it is a quick turnaround. But yeah.
So some of these next three are perhaps more for Amanda and Terry, and it has to do with the PPP forms, corporations or sub-S corps. How do they check those boxes? Any insights there?
Well, if they ask quite frankly, I forget on the application form. If it's asking you what kind of a corporation you are, then yeah, you have to check it if that's what it is. Amanda?
Yeah, I thought that there was a box for C Corps and a box for S Corps. I don't recall there being another subcategory.
And then the second one has to do with that question where it asks for ownership, even though the form is also taking nonprofit organizations, and your recommendation on that kind of signing as owner part.
I can speak on behalf of the nonprofit that I'm involved with, Peter. I would think the executive director would be able to do that, but I will most probably submit it as president and chairman of chairman as authority, the final authority.
Okay, and then
We've been accepting that way.
Okay. And then if someone hasn't filed their taxes, that's been extended, Terry, right, to another
Correct.
few months, the deadline.
Correct. Yeah, they can still apply.
So there's no connection with filing taxes from that. Tom, here's one of those, I believe, one of those other sort of organizations, non-bank organizations that may be processing loans.
Yeah, I don't know. I saw this question, and I'm sorry I didn't have a chance to go down to that website. So yeah, I don't know anything about that organization. It may be a third party that.
One of the things we'll do is write down the group that you recommended as well as this one, and see if we can do a little research when we send the email out to attendees to give them some direction if there are non-bank organizations that the loans can be processed through.
Sure.
Peter, I wanted to just add, I did go to this this website, and it looks like, given the high volume, that they aren't accepting any additional applications at this time. And I don't really know much more about this organization, but it didn't seem like they were going to be able to process these PPP loans.
Okay. This next question had to do with the EIDL and a bridge loan, and not finding the clarity on the SBA portal. Any advice on that first question?
Yes, so I did go to the SBA website, and I think what this question is actually getting at is perhaps the $10,000 emergency grant that's part of the EIDL. So my understanding in looking at that application, there's an option to say that you would like the $10,000 emergency grant as you're submitting your EIDL application.
Okay. And what about the ability to apply for both? How does that affect the PPP app if someone's already confirmed on the EIDL 10K?
You can apply for both loans. They cannot be for the same purpose. The $10,000 grant will be subtracted from the amount that you're eligible for under the PPP loan.
Okay. And we've already been kind of dealing with this question, which is if your bank or institution where you do business does not process these loans, where's that list of other lenders or other folks who are jumping into this loan processing? Tom, that was a big breath, not an answer, huh? Go ahead.
Yeah, not an answer. No, and again, I can only speak for our institution, and so we tried to get ahead of this. And I don't envy the other institutions that have opted not to do it. I'm sure they're getting a lot of grief from their clients, and B, the ones that are starting today or later in this week, because it's very stressful, obviously, for everyone involved. But I can assure you that, you know, everyone, you know, my other institutions are doing it as much as they can with their limitations they have.
Okay, next slide, please. Thanks. So, Tom.
So I can answer that.
If you're,
I can take this question, yeah. So we're just today getting clarity on the loan documents that the SBA is requiring. So that's moving. We should know tomorrow better how to get the documents out, but they're asking for a standard set. It's using a system called Laser Pro, and you know there's some tweaks to that, but we are working through that. And what we're trying to do today, candidly, is get the money sort of set aside or earmarked so that our clients, you know, don't get shut out of the opportunity. And then we're going to pivot to funding. I would hope that we could start funding at the end of this week. We're going to move as fast as we can, but we have to make sure that we get the loan documentation right. And to our clients too, we'll be reaching back out to you for certain information. So we're going to reach out to you saying that you've been approved, but we're also going to reach out for certain information so that we can make the loan documentation process go smooth. I hope that helps.
And so I think the audit is something which the second question here refers to the other end, which is after you've kind of spent it, what does the documentation look like on that end when you're submitting for forgiveness? So
we're going to be looking for basically proof that the money was used for payroll. That was used for payroll during the 8 weeks, and the other 25, again on the forgiven piece, was used for rent or interest expense or utilities. And as you can imagine, you just have to provide us with what can support that. You know, Terry, any thoughts on what a borrower might like to prepare for?
Well, certainly because it's the after June 30th, the quarter. If they, I don't know how fast that they would get their payroll returns from their payroll provider, but that would certainly provide a bulk of it. And I would think that you have to do canceled checks. I mean, that would certainly show what rent they were paid, or if they were paying any of the utilities or interest on the debts pre-existing. They would have to prove that was pre-existing, obviously. So right now, I haven't seen anything in particular. You know, as you know, the SBA just came out with some of the requirements just that Thursday night that you guys had to go through. So they're still trying to get the first part done. I'm sure we'll see further clarification afterwards. But I think those basic documents were at least mentioned in the act or some regs.
So before we go to the next slide, let me just jump in with a question related to something Tom said on the application system, a point of confusion. And it has to do with that 100K maximum level. So does that mean salary, or does the portion that the company's paying towards benefits and healthcare also get included in that 100K? Meaning, if someone's got what's the qualifying level?
Tom, you can correct me. The act talks about salary, and the SBA regs that came out talked about salary, although the regulations were somewhat confusing in that they used payroll costs, payroll, and salaries they interchanged those, even though they had different meetings. But specifically, I thought it said it was salaries. Did you hear something differently now, Tom?
That's a great question. We are seeing salary and benefits. We are frankly using compensation, total compensation, as our guide.
So does that mean that you would include in the 100K a pension or 401K inside of that 100K?
We're relying ostensibly on the client to prepare the payroll records, and we're looking for their calculation and the level of detail. So, Terry and I are sort of both looking for further clarity on that, but we're working with what the client gave us, and again, yeah, I'm sorry, I'm not giving you full clarity, but my interpretation.
That's okay.
And was that it's total compensation.
Got it. Okay, so let's go. I think we have to move quickly through these slides. It's 2:45. We are going to go, folks. I know we advertised until 2:45. We actually have this webinar platform available until 3 o'clock. So we're going to, as long as we have a bunch of participants on board, we're going to crank through these questions and integrate a couple of the ones that are coming in. So let's get going. Can essential businesses apply for this loan, even if they haven't been closed down by governor or federal orders?
Yes, I believe they can. I mean, again, the whole purpose is that they want employees to be paid.
Yep. Farms, home-based, daycare centers, 501c3s, or other nonprofit designations. Is there anything that excludes them from this package?
No, I believe they're included.
I don't think that
Okay.
No.
And this next one has to do with a U.S.-based subsidiary. I think we had this question last time. The example here was fairly specific. A British company acquired them in February of this year. Are they eligible? And these are all U.S.-based employees, which is 18 folks.
I don't believe
Terry?
that they are eligible. And Terry, you can add on that if you think that I'm incorrect, but where the control of the company is an affiliate that is a foreign entity, I would say they are not eligible.
Yeah, I think that one's going to be waiting for clarification, because if they follow the rules of the employees being residences, I don't know if they apply that to the owner versus these people are being employed here in the United States, and that's what they want to continue to make sure they're being paid. So I would err on that it is eligible, because these are U.S. employees and they reside here. But I haven't seen anything in specific on this. How would you handle this, Tom?
How would I handle it? I think the application does ask the person applying for it if they're a U.S. citizen or resident in the front page. So it's gray. Fortunately, we haven't had this scenario in our applications yet.
Okay.
I think just another important point to add on this, and I would agree with Terry that we can certainly take another look at the regs, but that this program still does track the SBA 7A program and their rules on affiliate companies. And I don't believe at this point that they allowed the affiliate company to be organized outside the United States. But again, I would agree with Terry that it's a bit contrary to the purpose for this program if it was not applicable to U.S. employees.
Read.
Next slide, please. So this is an interesting one. This person is about to buy a business. Will they be able to get relief if they pass papers now?
No.
On a transaction?
No, it has to be February 15th.
but the business was in business. It's just going to have a new owner.
Right. It's a new owner. It's a new business, and it wasn't in place in 2015. I know this.
So the
doesn't seem fair to-
LLC, right? Interesting. Okay. Next slide, please. So these questions were all about the clarity around the calculation. So if you guys just want to take these one by one, just bang down this list, that would be great.
I'll take first one. Yes, it's just the state and local taxes, and no, it's not the FICA or FUTA tax.
Second, income generated by LLC. I think that might be two owners considered payroll.
Yeah, so
not openers.
Then they wouldn't be considered in this in the payroll calculation. They'd be looking at their self-employed income and the specifics under the self-employed and the net income that they have. Because that's what they're going to be taking a look back at to reimburse them or get them some money.
Okay, and I think the next question is about probably a question for the payroll service that you're using, right? Is the Tom, is the payroll information the standard report for most payroll services that gets submitted to you?
We've seen a bunch, and actually some of the payroll providers have tried to help their clients out with a sort of a pre-canned calculation. Just found one, unfortunately, that had erroneous data, so we've had to go back and have them fix it. It wasn't erroneous, but it didn't have the calculation again for the 100,000 exclusion. Mm-hmm. But the payroll provider, that's great if you've got a payroll provider. If you don't, we find that the 940s or the 941s or the 943s or whatever you submit to the government as you provide payroll taxes is a good starting point, but also your internal records. I mean, we've taken everything from with those as backup. Those really help, so we can have at least an anchor, and then we'll use a spreadsheet. We'll use we're trying to work with you as much as we can, and obviously the size of the company and the sophistication.
Okay. Next two relate to
we're trying to be as flexible as we can.
Yeah. Okay. Medical benefits is part of what the qualifying costs, correct?
Yes.
Yeah. And what if that next to last question, if they're not provided by the business, can payroll tax be included?
If they're not paid by the business, then it shouldn't be included.
Okay. And then the forgivable items, just one recap on forgivable is salaries under 100K, healthcare costs, what else?
Well, any of the payroll costs, rent, utilities, and the interest portion of loans that were pre-enactment.
And I think
only if it hits only if it meets the formula required.
That some folks are also looking for. Right. But I think that one thing that some folks are seeking interest the deferrals, I should say, and just think about that as you're looking at the forgiveness, if you're looking for both programs, because if you're not writing a check for the interest during this period, it won't be part of the forgiveness calculation.
Mm-hmm. All right. Next slide, please. Who accounts? Calculating staff and ownerships. A seasonal business. Just Terry, I know you had this on a slide, but if you just want to give us one more kind of recap. This got fairly specific about when they had people and when they didn't.
Yeah, and they gave them 2 time periods, right? From February 15th, or they could start it off at March 1st, but ending June 30th. And on the slide, I took the order out of here. If you're not in business on February 15th to June 30th, 19, then they tell you to go from January 1st to February 19th and take that average.
My bad. We're going to share these slides, and this one actually was one of the ones I think, Terry, that you had written in and given the answers for. So why don't we go on to the next slide? Thank you.
Yeah.
How does commission compensation factor in to calculating payroll costs?
If it was part of the what you paid them over the 8-week time period, then that would be included as a part of the salary and wages.
Okay.
And as long as that was, at least 75% of your total expenditures, then it would be forgiven.
So the second one sort of asks the common sense question we all scratch our heads about, which is the government is actually paying me to keep my folks on payroll during a period in which they may not be working much. This is true, isn't it?
Correct.
Yeah.
Okay.
That's the intent of the program.
Yeah. How does someone quitting or resigning, does that have any effect when we're doing that FTE equivalence, or is it just purely your FTEs versus last year, those designated time periods, and the circumstances of anyone being in or out of their job are not material?
That's correct. It should just be the FTE comparison. And if you lost someone, then they want you to, if you hired someone back, then it's not to be the same person. As long as you have that body in there for the FTE count, that's the formula they use.
Okay. And then hourly employees and overtime, which is a similar question probably to the commission thing, which is a fluctuating pay. Any calculations around that people need to be aware of?
Yeah, whatever you paid, you paid.
Okay. Next slide, please.
Right, exactly.
This is a distribution to loan officers. Does that portion that this question, this person who owns the S Corp, does that portion get added to their salary?
I do not believe so.
This next question is when someone doesn't have a paycheck. I believe, Tom, you answered that by just talking about how folks are able to summarize their compensation through non-payroll records.
Exactly. Yeah, again, we can't anticipate every scenario, but we're trying to be as pragmatic as possible. That 940, 941, 943, what they're paying in on a quarterly basis is very valuable, however.
Okay. And does anyone want to take on that third question on this list, which is a calculation of the PPP question?
Yeah, I believe that captures all the totals.
Yeah, I would agree.
Okay. Next slide, please. Independent contractors. I think you addressed this during the presentation.
That was Amanda.
Yeah, I did. I said that part-time workers and temporary employees are counted in the same way as full-time employees, but independent contractors are not, because the intent is that they could apply for this loan for themselves.
Got it. So Terry, on question 2, you just said you don't have to have the same people. It's about FTEs, but how is the salary level of sort of total payroll when compared to previous periods? How does that affect the loan or forgiveness?
Well, if your wages were higher in 2019 than they were in 2020, then you're not going to be paying 75% potentially of the total loan, and so that portion would not be forgiven.
Well, but you can pay it back.
Right.
And
It'll
then
be a
you
loan.
pay it back. Yeah, you pay it back in that 2-year time period.
Right.
Yeah. Okay. And I think it's a similar question that we've already addressed right there, which is that the exact same people on your payroll is less important than the equivalent FTEs. current monthly payroll is less than it was a year ago. We just went through that scenario. Next slide, please.
Well, I don't know if this is what they were trying to reimburse for people that own real estate, right? I don't have an answer for number one. Amanda or Tom?
Yeah, that's a really good question.
Don't they call this on CarTech? They call it Stump the Chumps, right?
There you go.
So we found the winning question that the folks couldn't answer. We'll look that one up for you. Let's go on to the next few on this sheet. K1 income. How is that calculated?
Well, it depends on, I guess, the question. If they're self-employed, then they have to file as a self-employed person and show their net income or whatever proof they have, which would be obviously a K1. If they were an LLC or a sole proprietor, LLC, and they were paying payroll, then it would be the payroll costs, and then you take into consideration the payroll costs and that person's net income. So I don't know.
Okay, I think we answered the third one, didn't we? Related to contractors.
Yeah.
The last one, I know there are manufacturers, some that have a number of folks on their payroll, but it comes through an outside agency. Again, are those not counted, even though it could be a large volume of people working out of business if they're contracted?
That's another one I don't have an answer for. You know, the S&G did have a person from Robert Half for a short period of time, but I wouldn't. There are other ones that just have that on a regular basis. 6 months, 9 months gigs or something. I don't know how that's going to be applied.
Okay.
Definitely want to make sure that I was going to say you want to make sure the agency isn't applying for this as well. You could have duplication. It's not as clean.
Yes. Okay. So so if it's a big number of employees, coordinate that with the agency that has them as that is contracting them. Okay. Next slide, please. Actually, we're at 3:03. Why don't we just take this slide and we'll call it a day, and we'll try and follow up and get some of the other unanswered questions addressed. But let's just run through this one, and we'll call it a day. Sole proprietors question.
I think that comes down to that self-employed income again. So what their net income was, and if that's what is being paid out to them, I don't know how they show that was paid out for the proof of the forgiveness. So that's what Tom and the banks got to figure out, of the SBA. But they are eligible. I just don't know what proof they'll need to show that X amount of dollars was they used the loan to pay themselves, I guess. That's all they can do is cancel checks to something.
And certainly,
Okay.
Certainly it would be capped at 100.
Right. Understood. I think we definitely answered the K1 question. I believe we addressed the question on the number 3, which is the seasonal employee question, and the fact that if an employee doesn't come back for whatever reason, they're just not in your FTE total. And then the last one is the general contractor asking if they include people from the union hall or third-party labor firms. Any thoughts there?
That's another one that I couldn't give an answer. They might be, I'm looking at some of the union. They might work X amount of hours for one person, but maybe a certain amount of hours for another. I know I have some clients that they're the same employees they've always had, so I would think that they would qualify for that.
Got it. So I think we promised a 45-minute webinar. We're at 65 minutes. I want to thank everyone who attended, and thank our expert panelists and sponsors. I'd like to thank Fletcher, Tilton, PC attorneys at law, and our presenter, attorney Amanda Risch, S&G business consultants and certified public accountants, and their founding partner Terry Shepard, and Country Bank, along with Tom Wolcott, the senior VP of commercial banking. And a big thank you again to Alan Falcon and his company Cumulus Global, who was our technical backbone and helped us put on this webcast here today. We appreciate all of you joining us. We will have a follow-up email with a lot of information, and we're going to continue to track this legislation, and I think we'll be offering more opportunities to ask area professionals the kind of questions you need to have answered in a timely basis. Thank you all for participating, and enjoy the beautiful weather. Bye-bye.
Thank you.
Thank you.
Thanks.